What a crazy week it's been for Applied Digital, with the stock rising over 25% in just 4 days, to hit a new 52-week high of $17. Of course, Applied is up about 300% since I covered the stock back in April as one of my best stocks to watch. But Applied Digital's importance is still being overlooked and undervalued by the market. Now, I'm sure you've all seen graphs like this and pictures like this showing just how big Nvidia has become and how Nvidia is powering the AI boom. Even this one, countries whose entire GDP is now less than Nvidia's market cap. It's insane really, but as much as AI is dependent on Nvidia, it is also dependent, and maybe even more so dependent, on data centers, and this is where Applied Digital comes into the picture. Now, we've got a lot to get through in this video, so I will try to keep this intro short, but if you find any value in this, can I ask you to smash the like button? It takes a lot of time to make these videos, but it literally takes 2 seconds and costs nothing to smash the like button, and it helps the channel out so much. I'm aiming to get 500 likes on this video. Help me hit that goal. Subscribe to the channel if you're new and hit the bell notification so you don't miss out on any new content like this. I want to point out that I'm not a financial advisor and this is not financial advice, so always do your own due diligence. Now let's get into it. Applied Digital develops, builds, and operates next-generation data centers and cloud infrastructure in North America. Its data centers provide digital infrastructure solutions to high-performance computing industry. The company also provides artificial intelligence cloud services, high-performance computing data center, and crypto data center hosting services. The company's purpose-built facilities are engineered to unleash the power of accelerated computing and deliver secure, scalable, and sustainable digital hosting, along with software as a service and GPU as a service solutions. Backed by deep hyperscale expertise and a robust pipeline of available power, Applied Digital accommodates AI factories to support the world's most enacting AI, ML, blockchain, and high-performance computing workloads. Looking at the investor's presentation, we can see that Applied Digital have a world-class management team with decades of experience across industry-leading companies. The company has been positioning itself for huge growth over the past few years, and that has now ramped up. AI demand is increasing, and so too is the demand for power. The demand for power has capacity expected to triple in the next 5 years, with hundreds of billions of dollars being spent annually by the world's leading companies. So Applied Digital has just hit a new 52-week high today on AI optimism and retail momentum. And this comes on the back of some big news this week that has seen AI stocks surge. First, Oracle stated it expects booked cloud orders to exceed $500 billion, and the Nebius Group bagged a multi-billion-dollar AI infrastructure deal from Microsoft. But Applied Digital has been in focus for the past few months. The stock has risen significantly in 2025, and last month, the company closed the final part of a deal with Coreweave worth $11 billion over 15 years. This deal was initially worth $7 billion for 250 megawatt capacity when signed back in July, but Coreweave exercised an option for an extra 150 megawatt in August, bringing the full deal up to $11 billion at their Polaris Forge 1 campus. But with the company breaking ground this month on the $3 million Polaris Forge 2 campus, Applied looks set for a bright future. But what do analysts think of Applied Digital stock right now? Looking at MarketBeat, we can see that APLD stock is covered by 13 Wall Street analysts who have a consensus price target of $15.64. But there is a high forecast of 23 and a low of just 7. But all analysts are in agreement because there is no sell or hold ratings. All 13 have given the stock a buy rating, with one analyst going as far as to rate the stock a strong buy. Now, as we already know, APLD stock has rallied about 400% since hitting its low point in April. And the consensus price target is not very accurate because the low target of 7 was set back in April, while all recent analyst targets are far above this. We can see these analyst ratings here. All analysts have boosted their targets over the past 2 months. The most recent of these is H.C. Wainwright, setting a price target of $20, and Craig Hallam boosting their target to 23. So with the stock currently at 17, there is still a lot of optimism around this company and plenty of upside potential. Now, before I go any further here, I want to take a look at the financials from the most recent earnings report, because you need to know the figures here in order for the next part of the video to make full sense. Anyways, if you're enjoying this so far, don't forget to give this video a thumbs up and consider subscribing to the channel if you're new. So first, here are the main highlights. Revenue was 38 million, up 41% from the same period last year, and the net loss was 26 million, a huge 25% reduction on the same period last year. The net loss per share was down to 12 cents, down 57%, while the adjusted net loss was just 3 cents and EBITDA of $1 million. For the full year, revenue was 144 million, the net loss was 161 million. This loss is actually up 118% since last year, so we will need to look at that in a moment because that doesn't look good. But overall, adjusted EPS is a loss of 6 cents and adjusted EBITDA of 19.6 million for the year. Now, looking at the actual 10K and skipping right down to the balance sheet, we can see that Applied Digital have total assets of over 1.8 billion and total liabilities of 1.2 billion. The company's largest asset by far is property and equipment, which is $1.2 billion, but they also have cash of 41 million, which is more than 10 times what they had this time last year. And they have got another 72 million of restricted cash compared to just 21 million last year. In fact, total assets have increased, nearly tripled since last year, going from 760 up to 1.87 billion. But liabilities have also nearly doubled since last year, now at 1.2 billion, and this is largely thanks to long-term debt. And looking here at note 7, we can see that this long-term debt is largely made up of convertible notes that have a maturity in 2030 worth 450 million and a $375 million loan. Other than this long-term debt, the company's overall liabilities would be about the same as last year, coming in at about 600 million. Now, looking at the income statement, and this is important, we can see that Applied Digital's total revenue has been increasing each year, from 55 million in 2023 up to 144 million for 2025. But I mentioned a couple of minutes ago that their net loss had increased massively. We can see that here. From a loss of 149 million in 2024, they have a loss of 233 million in 2025. Now, this is a huge increase, but it is explainable. We can see here that importantly, the operating loss has been cut from 32 million in 2024 down to 16 million in 2025, but they have been hit by these two losses in particular: loss on conversion of debt and loss on change of fair value of debt. Now, these are not normal operating losses. These are one-off expenses which did not happen in 2023 or 2024 and could well not happen in 2026 either. Now, this is a very good article on Seeking Alpha. Applied Digital's AI potential is huge even if the market disagrees. Now, this analysis was written earlier this week, just before the stock ran 20% in just 4 days, and this makes a lot of good points. Things like these are why I find this platform so invaluable when doing research. As always, I'm not going to spend 20 minutes going through this article in detail. I'm just going to look at a couple of main points and some key risks that should not be ignored. So I've put a link to this in the description below for anyone who wants to have a read of this article. First of all, when it comes to AI data centers and their growth prospects, there is a major concern. Every single hyperscaler this year has either expressed how growth in their data centers is robustly buoyed by AI, but constantly constrained by capacity. So capacity is a major concern. But Applied Digital have made waves in the past 3 to 5 months as they pivot their business model to completely focus on addressing the capacity requirements of hyperscalers and HPC clients. And especially important is the multi-billion-dollar deals with Coreweave. Now, skipping down here to the importance of the Coreweave deals. Starting next year, Coreweave's contribution to Applied Digital's revenue base will play a significant part in the company's outlook. The agreement implies Applied Digital has to deliver 400 megawatts of future capacity via set milestones over the next 2 years, worth 11 billion in backlog for Applied Digital. Applied Digital could score $800 to $900 million of revenue by 2028. That implies a revenue compound annual growth rate of around 80% over the next 3 years. Now, we've already seen huge revenue growth from Applied Digital over the past 2 years, but this is absolutely massive revenue growth. This is substantial for Applied Digital and for investors. But the only problem is Applied has to build out capacity for its mega client. As per its 10K, Applied has only 286 megawatts of capacity online. Now, with all the recent good news, we need to discuss a couple of risk factors. First and foremost is the fact that a huge concentration of forward revenues is based on just a single client, which is never really that good to see. In this case, it's Coreweave, and based on earlier filings with the SEC, Coreweave could terminate the deal for any reason, which would severely hurt Applied Digital. Now, if Coreweave were to pull out of the deal for any reason, then there would surely be a termination fee. So that wouldn't be too bad, and to be honest, I can't see Coreweave walking away. Only yesterday, Coreweave CEO was saying that AI demand is overwhelming and that peak AI investment is still nowhere near. The industry's capacity to deliver the compute that is required by OpenAI, by the hyperscalers, by the enterprise, by the sovereigns, it's just layer after layer of overwhelming demand, and so Coreweave is building as fast as they can and building as large as they can. However, with this in mind, there is the risk that Coreweave could also terminate the deal if Applied was to fail to satisfy certain installation and delivery requirements. And these are quite demanding, to be fair, building 2 during the second half of 2025 and building 3 in the first half of 2026. Now, as it says here, despite the risks that markets are pricing in, Applied Digital's potential to capture value in the AI landscape is significant. Coreweave as a customer represents the start of a significant revenue flywheel for Applied Digital, and I suspect markets will eventually come around to being even more bullish on Applied Digital. And especially with the company breaking ground this month on the $3 billion Polaris Forge 2 campus, which is designed for 280 megawatts, with capacity to scale beyond that. This is scheduled for initial operations in 26 and full capacity in early 27. But guys, what do you think? How high can Applied Digital go? After all, the stock is up nearly 400% in just 5 months. Let me know your thoughts in the comments below, and always do your own due diligence. Remember that I'm not a financial advisor, but if you enjoyed this analysis, then please like and comment, and I'll catch you in the next video.